Intel stock price has dropped about 10% since they reported their earnings about 2 weeks ago. So the question is there any good short-term or long-term plays here with Intel? So today's agenda to answer that question is I'm going to go over my price target for Intel. We're going to look at Q3 2021 results. I'm going to look at their financials compared to some of their closest competitors. I'm going to look at their stock price history, look at their price performance versus their peers. We're going to look at some headlines in the news lately, and then I'm going to give my final thoughts on Intel as an investment. Now, a plug for the channel. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis, such as this one. If you like anything throughout this video, please hit that thumbs up button. It helps me out a lot. Now to your content. All right, my price target for Intel is $60 in the next 12 months. That indicates about a 20% upside and about a 10% downside if it were to go down to $45 or $46 a share. All right, looking at Q3 results for Intel, the results were reported on the 21st of October. Earnings per share came in at $1.67. This was a beat by 61 cents, and analysts had them at $1.06, or a 57% beat on earnings per share. Really impressive there. And on the revenue side, they missed by $186 million. Analysts had them at $18.28 billion, and they reported $18.09 billion, or a miss of about 1%. Not too far off. All right, jumping into the highlights for Q3. They raised their guidance for full year 2021 on earnings per share and gross margin, so that's really good to see. They exceeded their July guidance of EPS and gross margin. One of the downsides that was announced, or at least was highlighted by the news, was that their CFO was leaving in May of 2022. And then going down into another negative that was kind of highlighted was that one of their core pieces of their business was down 2%. This is their client group. This is their data center group. So you can see that these two groups make up a core, a large percentage or majority of their revenue. So when you see a downtrend in one of these groups, there's definitely going to be some focus on that. And they highlighted it here. The client computing group was down due to a lower notebook volumes due to industry-wide component shortages and on lower adjacent revenue, partially offset by higher average selling prices and strength in desktops. So overall, I don't think this is a huge deal. This could have just been something more cyclical, but this chip shortage is definitely affecting them, while some of their other competitors actually had an increase in this quarter. Intel's health is going negative. So this is something we're going to talk about a little bit later, them versus some of their competitors. But in the other highlights, they were selected by the U.S. government foundry. They announced a partnership with Amazon, and they broke ground on two chip factories in Arizona. So that's really great to hear that they're expanding there. All right, looking at Intel, how they compare with some of their closest competitors, AMD, Nvidia, Samsung, IBM, and Taiwan Semiconductors. I want to look at revenue, net income for the last 12 months on those two, market cap current, price to earnings current, growth of end of 2018, 2019, and 2020, and the shares growth, basically shares outstanding for the last 5 years, and whether they've grown that or they've reduced their shares outstanding. So jumping into the revenue side, the largest by revenue is Samsung, followed by Intel, Taiwan Semiconductors, and IBM. AMD and Nvidia are still relatively small. They bring in a lot of money, $14 and $21 billion respectively. However, they are the smallest in here. On the net income side, the largest is Samsung, but still not by much compared to, from a revenue perspective, INTC comes in at 2, Intel, Taiwan at 20. As far as a net income margin compared to their revenue, the biggest and best is Taiwan. You can see they bring in $54 billion in revenue and $20 billion in net income. So really, really good performance there on bringing, earnings per share back to the as a percentage, bringing it back to the shareholders. Intel does not that far off at $21 billion, but still they still have $26 billion, $2 billion more in revenue, and they barely have $1 billion in revenue or net income more. AMD is at $4 billion, Nvidia at $7 billion, IBM at $4. They are definitely the lowest performer compared to their revenue to net income margin. Now on the market cap size, INTC Intel is at 206, AMD at 164. 743 billion for Nvidia, the largest of all of them. From a market cap perspective, Samsung is at 473, IBM at 122, Taiwan at 568. Price to earnings, INTC is around 10 right now, AMD at 42, Nvidia at 106, Samsung at 14, IBM at 23, and Taiwan at 29. And so we can kind of make more sense out of the market cap and price to earnings compared to revenue. The growth rate is very important here. So I think INTC, Intel's basically in the middle. Compare them to some of the higher producers, which is AMD and Nvidia. That's why they have these really high PEs right now. If you look at AMD, they had 23, 4, and 45% growth rates in the last 3 years, respectively. And Nvidia had 20, -7, and 52% in the last 3 years, respectively. Samsung had basically no growth in the last year if you factor in this -5. IBM has been shrinking in size if you look at their overall revenue. And then Taiwan Semiconductors wasn't doing super hot for the 2018, 2019, and then had a 25% growth in the last year. Looking at IBM, just kind of going through these, IBM is basically their price to earnings, in my opinion, is way off, this just doesn't seem right to me. Just looking at their revenue to net income to price to earnings, they really shouldn't even be comparison to anybody here. So they did have shares outstanding go negative, means they decreased in buybacks, but that's over 5 years, so 1% a year. Looking at the growth rate in comparison on the PE, though, if you look at Intel versus AMD and Nvidia, which are most commonly compared, and maybe Taiwan Semiconductors, you can see that Intel has definitely the lowest price to earnings. I think P&E could definitely go closer to 15 for them. Their growth rate is not superb, but it's also not terrible. I mean, 8% is not bad for a company with $78 billion in revenue. So overall, and also another good thing to note here is that they have -16% from shares outstanding from 5 years ago to current day. AMD's increased their shares outstanding by 51%. Nvidia has effectively stayed exactly the same. They have been issuing and then buying back, issuing and buying back, but effectively it basically went back to zero. Samsung, I really couldn't find out, but it looked like their shares outstanding had remained flat, relatively flat. And IBM, -6, and Taiwan about basically zero as well. So overall, AMD is the one that I'm probably more if I was looking at AMD versus Nvidia, Nvidia definitely looks the best. Also, if you look at their revenue versus net income, it looks really good there too. That's a really good ratio to bringing net income from gross from revenue. So really like seeing that. AMD not nearly turning around as much, and you can see that reflected in their price to earnings. Okay. So, but is Nvidia with $7 billion worth 743 right now? Now, if they continue to grow at 52%, yeah, you could probably rationalize that in the next 5 years, maybe a 5-year value being worth what they are right now. But if they if they have any more of these negative years, this valuation is going to go down significantly. This is a very, very, this puts them in some of the, top tier of valuations is 743. So, and then looking at INT specifically, that's why people are here at $206 billion. I don't think this is a terrible valuation. Like I said, I think their P&E can be closer to 15. This net income compared to the revenue is, right around, what is that, 25% from a margin perspective. I think that's very good margins for, a mature company. So I really like Intel from looking at their financials versus some of their leading competitors. They have a very good value proposition if you compare them to revenue, net income, market cap, price to earnings. Their growth rate isn't terrible, and they've been buying back shares. So there's a lot to like for looking at these metrics on Intel. Now, when it comes to market share, Intel is currently at about 15% of the total chip market. When you compare them over the last 10 years, they went from about 12 or 13, sorry, I don't have the graph in front of me, to about 15. They were at 16 at one point, but now they're about 15. In the last 5 years, they basically remained flat, which is, in my opinion, a good thing if you compare them to an industry from a chip perspective that just continues to grow. So if you're already the leader, in terms of market share, and that industry continues to grow, your revenue thus should continue to grow. Not nearly as much as some of the competitors as we've seen, but it's still a good place to see that the industry overall is not contracting. And if they're not improving their market share, they'll just remain flat from a growth perspective. All right, looking at Intel stock price history over the last 5 years. If you bought in the last 5 years, you're up about 47%. I haven't done this yet, but I'm pretty sure that would not beat the S&P 500. If you bought it in the last 4 years, more than likely you're up a very modest amount. More than likely the lowest it's been in the last 4 years, around $43. So you'd be up about 17%. Definitely not outperforming the S&P. During 2020, they saw a sharp decline, and then it basically went back up into the $60 range, dropping to the 50s, back to the 60s, back into the 50s. So there's been a very, very big roller coaster here. It just keeps going up and down, and big peaks, big drops here. But in the last 4 years specifically, it seems like there's a floor around $44 to $46 for the name. And that'll be an important number to know where your relative downside risk in Intel is. The question is, what is the upside with Intel moving forward? All right, looking at price performance of Intel versus some of its competitors, Nvidia, AMD are in blue and orange. Taiwan Semiconductors is in purple, the S&P 500 is in green, and INTC on the 5-year chart is the lowest at 43% up. They are in gray. So you can see that INTC is definitely an underperformer if you compare it to both the SPY and its peer group in the last 5 years. If you bring that out to 10 years, they're still going to be underperformers. Let's bring that in on the last 3 years. They're still underperforming. Bringing it back to 2 years, they're actually negative, while everybody else is either very high positive or compared to the market, up very good, 51%. In the last year, they've gained modestly about 12%, still not beating the market as well as not beating any of their peers. Bringing it to the 9-month range, still not beating any of their peers or the market. The last 6 months, they're down 11%, not beating, again, any peers or the market. And let's go down to the last month. This is when their earnings were released a few weeks ago. You can see the big drop. All their other competitors have increased, did well during earnings. They're up, 32 and 42% respectively. And Taiwan is basically staying in pace with the market over what I've seen. And again, Intel is definitely down. Now, I like showing price comparisons versus peers because it really does highlight, and this is a great example, that putting all your eggs in one basket could, in a given industry, could definitely limit your upside. And also, you could just pick the wrong one. And so that's why it's always good to hedge your bets, always have some sort of risk mitigation. If you're going into an industry, pick a couple names if you want a little bit of diversity. Maybe just pick the industry if that's something you're really hot on right now. But again, if you just look at the SPY versus this one name, it would have underperformed all the other semiconductors except for Intel, which you would have had a bad day, or basically had a bad day if you're looking at it compared to the other names. So that doesn't mean you should invest in AMD or in Nvidia moving forward. You really do need to compare them and make sure that you're good with the risk profile moving forward, that you're comfortable with their growth rates, and you're also comfortable with the investment overall. Now, when that news came out, I entered into a position on August 18th, the 28th, and the 3rd of September, and I purchased relatively equal lots. My cost basis was somewhere around the low $49 to $50 rate. And then I went ahead and sold that position at $58, getting close to where I was planning to sell at $60. I was a little worried it was going to bounce off of 60. If I would have held on into it for a couple more months, it would have went up to 68. But as I say all the time, when you set your price target, you either need to make a decision whether to buy or sell. Didn't feel confident about it at the time, and I went ahead and sold. So over the course of this period, I went ahead and sold on February 4th, and that was about a 16% gain over the period. So it wasn't a huge position at all, but it was a nice little chunk of change. Now that transaction looks very similar to what you could possibly do in this situation. However, there are some nuances. In August and September of last year, 2020, there was something that happened in October. There was vaccine news, and basically everything took off with the reopening news of the vaccine. So I don't think INTC Intel was unique that it took off like other stocks across the board, and it went up to $68. I sold it before that at a little less than $60. And so I think there is some risk here that it could extend and could hang out in the $50 range, like around $50 for over 6 months. But I do think fair value would be closer to the $60 range comparison to where it's trading in terms of its market cap versus some of its peers and price to earnings ratio and some other metrics where it just doesn't seem like it's being valued fairly in the market. Now jumping into some news, this one is about the PC chip business, and as we mentioned in the earnings call, they had a 2% decrease in their PC chip business. Scrolling on down, there's a statement by the CEO, Pat Gesslinger. We call it match sets, where you may have the CPU, but you don't have the LCD or you don't have the Wi-Fi. Data centers are particularly struggling with some power chips and some of the networking or Ethernet chips. A good statement here, he did say that he expected the PC semiconductor shortage not to end until 2023. But the good news in that statement is we're in the worst of it now. Every quarter next year will get incrementally better, but they're not going to have supply-demand balance until 2023. So that is some good news, sprinkled in with some bad. Now from a headline of January 5th of 2021, AMD overtakes Intel in the desktop CPU market for the first time in 15 years. You can see over time, they definitely overtook them back in 2006. This was probably AMD Athlon, some of those chips. But you can see over time, AMD started to shrink, and now in the last several years, they've gone back up to 50.8% of that desktop market space. And part of this was because of AMD was able to get to the 7 nanometer architecture quicker than Intel, and Intel was struggling last year, and that was partially why we saw that dip in their name, is because they continue to have issues getting that chip out. But when it comes to the laptop and server CPU markets, Intel enjoys at 83%, basically 83% of the laptops tested ran on Intel CPU. And when it comes to the server side, Intel enjoyed a 98.6% market share. All right, my final thoughts on INTC Intel as an investment. I do think their price target is at $60 a share in the next 12 months. As I stated earlier, it's a 12% upside with about a 10% downside risk to the $45 to $46 range. In my opinion, the financials look fairly solid. They have a stable market share that hasn't really increased or decreased. Growth is going to be in the low single digits more than likely unless something changes. If we do see an increase in growth, I think there's going to be a big pop. If there is a slight decrease in growth, I don't think it's going to have a ton of impact on the stock price just based off of where it's being priced right now. Now I think the price movement in the stock has definitely been a little bit overblown in comparison to what there was actually reported in Q3 earnings, and then you match that up with what the CEO is guiding for future quarters, with saying that in future quarters into 2022 things are going to get improved quarter over quarter in terms of the chip shortage. So I think it was a little bit overblown. I do believe INTC Intel is a good value in comparison to its peers, so I'm not really worried about it. But however, if you do look at the previous history over the last 5 years, for example, it has definitely underperformed inside of its peer group as well as comparison to the S&P 500. So with all that being said, I believe the real risk reward here is not super attractive for me right now at these prices. I'm going to be a little bit more interested if Intel drops into the $45, $46 range. That way I really have mostly upside and not a lot of downside here. I also think that the short-term play may be longer than I would want to play it if I was going into a shorter position. I think this may hover in the $50 range for more than 6 months based off of my gut feeling and the way the stock has performed in the past. I don't believe there's going to be another COVID bump that's going to affect all stocks. And then when you look at how the sentiment of Intel versus AMD and Nvidia, which are its two biggest competitors right now, at least in the big semiconductor industry, you have pretty negative sentiment towards Intel. And until those growth rates reduce for Nvidia and AMD, I don't believe the sentiment is going to, really change. It's always going to be Intel versus AMD and Nvidia. And with that being said, long term, there could be many, many years of Intel just staying with a very low growth rate in terms of overall revenue growth. I think it was like in 8% in the last year. If it goes into the 1%, which is what it's looking like for 2021 versus 2020, then you could have a very, very stagnant stock price in comparison to both its industry as well as the S&P 500. So with all that being said, there's not a play I'm going to make at this very moment. However, I do think it is a very attractive stock. I think there's a lot of good fundamentals around it. However, right now the risk reward is just not there for me, and I'll be paying attention to it. And so if things do change, I'll make another video. I do videos on personal finance, investing, and stock analysis. So if you like this type of content, please consider subscribing. If you found anything helpful in this video, please hit that thumbs up button. It helps me out a lot with the algorithm. Thank you so much for watching today's video. My name is Frank Finance, out.